I'm pleased to welcome experts and industry leaders who will look at the future of crypto and opportunities in online trading. Please welcome the moderator, Ian Taylor, Executive Director at Crypto UK, who will introduce his panel. Ian, the stage is yours.
Good afternoon, everybody, and thank you for that rapturous applause. Welcome to the next panel today. And as was just said, title of the panel, Hodling On, Reimagining Crypto Market Structure. First of all, let's introduce our illustrious panel. So starting on my left, please go ahead.
Great. Good afternoon, everybody. Lory Kehoe. I am Coinbase's Business Development Lead for EMEA.
Good afternoon, everyone. I'm Diego from Binance.com institutional team covering UK, Europe, and some Spanish-speaking jurisdictions as well.
Hi, everybody. I'm Andrey from Nexo. After 15, 16 years in the traditional finance, last year I joined Nexo, so I enjoyed 100%.
Thank you very much. And I'm Ian Taylor, and I'm board advisor at Crypto UK with the UK's trade association representing 160 members from across the community. Okay, so we can safely say the last few weeks and months have been a roller coaster for many areas in the crypto ecosystem. Is this an isolated crypto sector event, or will we see contagion and financial stability questioned? What can be done to ensure these credit crisis events do not continue? How do we move past this? So today we have three of the largest crypto trading venues to discuss some of this market structure and what can be done and what will perhaps be the fallout. So let's start by discussing and getting into the detail of what has occurred in the last few weeks with the FTX collapse. And in fact, let's sort of ask our panelists, starting to my left here with Lory, what's your view? And then what do you think has happened and perhaps might happen in the next few months or years?
Okay, a huge amount to unpack, and as the story, I guess, continues to unfold, unsurprisingly, my view, like probably most people here, is that it's been incredibly disappointing, and it's a black eye on the industry that we've been working hard to, I guess, to mature. Coinbase has been around for 10 years, so focusing on being responsible, trusted, secure, compliant, and regulated. So when things like this happen, it shakes our industry. However, for us, I guess, what's important is to kind of stick to the knitting in the sense that, what we've always done has been hard at times, but I guess we've been vindicated in terms of the approach that we've taken and where we are today. So it's challenging, but we have to, I guess, continue to monitor developments and then, keep building.
Thank you. Let me ask Diego for his thoughts on this question.
Yeah, well, absolutely, I agree with Taylor here. So I think what happened, it was unexpected for everyone around the industry. It unfolded very quickly, and it puts us back 3 or 4 steps to where we're going and where we're doing. So I think we now, as industry leaders, need to work together with regulators and jurisdictions in order to overcome the trust that has been broken. So I think we will discuss later further steps that we're taking as an industry and as a players of this environment.
And Andrey, your thoughts, please.
Yeah, totally agree. Obviously, with my colleagues. In general, I would want to put maybe 2 main things, which actually we are using for our philosophy from the very first moment. So over-collateralization, so never do under-collateralized or uncollateralized loans, always over-collateralized loans. And the second one, which I think now we are changing in general the industry, is the transparent. So constantly showing that your assets are more than 100% of your client liabilities. I think these main topics are really important for the industry, especially after what we are seeing now in the last few weeks.
Well, thank you. And so let's move on And as this is an institutional event, let's sort of focus on the adoption we've seen in the institutional space over the last few years. Does the panel believe that the contagion we have already seen within the crypto ecosystem, not just with the FTX fallout, but prior to that over the last few months with other market participants falling over due to poorly managed leverage and risk management, do we see a further squeeze? Obviously, we've seen some downward price action recently. And does the panel think that this squeeze within the crypto sector may even spill out into established sectors such as venture capital, for example?
Happy to take that one. Well, obviously, the insolvency of any major player in the industry will have direct and indirect impacts on any industry participants. For direct impact, for example, on FTX, anyone that had exposure, direct financial exposure, they will be impacted by the FTX insolvency. But indirectly, we all been affected by this issue. So I think we all need to work together into building that trust and how we can overcome that. But then again, on the indirectly side, talking about traditional finance, so BC funds and crypto banks, what sort of contingency they can have. I think if you compare it to the traditional markets, crypto is still very small. It's under $1 trillion market cap compared to equities or bonds market, so which is hundreds of trillions of dollars. So I think the exposure is still very small on crypto. So I don't think that there will obviously be some liquidity squeeze to any participants in the market, but the exposure these BC funds or crypto banks will have will be, well, I expect to be minimal in terms of what their actually portfolio looks like.
Does any other panel?
Yeah, obviously it's a big shock in general for the industry. Never mind that we faced before FTX some other players which were down, unfortunately. Look, for a short term, obviously we are all affected about this. Never mind if it's typical exchange or lender or other crypto provider. We are all affected because the domino effect is here. For a long term, I think that it's not so bad for the industry because we need really to be more careful. We need to put our effort not only for overdoing things, so taking more and more business, but to start doing the things in the right way to be more careful, to follow the best practices from the traditional markets, let's say, and to implement this in the crypto space. And I think the regulation also is coming, so this will help as well. So for a long term, I think that this will be, let's say, let's put it as a new beginning for the industry.
Yeah, and look, I think the R word comes out here, which is regulation. And I guess in many ways, from a EU perspective, MiCA is important, but we also have got to think about how, I guess, crypto is global, so therefore regulation needs to be global as well. So how can regulators, I guess, look at MiCA, what's going on in the US, what's going on in the UK, so that there is, I guess, a semblance of a harmonized rule set, which I think is really, really important. So I think, whether it's Binance or Coinbase or Nexo or whoever, working with regulators to inform them as to what is careful, considered, and thoughtful regulation that doesn't, I guess, that really doesn't kill what Web3 is and what it's all about. And that's the balancing act. And I think from a regulatory perspective, regulators don't know what they don't know, and this is why it's on us, it's on all of us here to actually help educate them as to what is going on. Otherwise, stuff will be regulated out of existence, and the UK will not become a global crypto hub, as the case may be, or Europe for that matter either. So I think regulation is needed, but those mature conversations need to happen.
Yeah, and that's well said, Lory. And I might just add that all three of our panelists are members of Crypto UK, and our main objective is to advocate, educate, and support government in making sure they get policy and regulation balanced and proportionate, not to stifle the innovation of Web3, which is revolutionary in my view. Okay, so let's move on to the next question. here, and perhaps I'll start with you, Lory, because Coinbase are well known as being very pro-compliant and regulatory first, the first listed exchange on a global exchange in the US. So naturally have to provide specific requirements to be listed on NASDAQ. So we've seen post the collapse of FTX, a call by the industry, not just those in crypto, but outside and across the piece, for more transparency for centralized exchanges, such as third-party audits, proof of reserves audits on assets and liabilities. Does the panel agree with some of these comments that we've seen in the last few weeks? And what also would be beneficial that we could do as an industry to make sure that we quickly reinstall confidence in this sector? So to you, Lory.
Yeah, look, and for those who know Coinbase, I guess we publish audited financials on a quarterly basis. So I guess there was a conscious decision made a number of years ago to go down that path, knowing the overhead that goes with that in being transparent in that way. So for us, this is business as usual from a transparency perspective. All that information is already there. You can go on to Coinbase.com and you can look at our investor relations page and download all of the quarterly reports that we've published to date. In relation to proof of reserves, I think it's a step in the right direction. It's something that we're looking at closely. And really what I would say is it's probably a combination of both. So a set of audited financials plus proof of on-chain reserves, the case may be. Then I think you're starting to get to really robust data. Also, I think it's important as to, I guess, who are the entities that are providing the audits, I think is maybe also important, right? I think we've seen in the last while maybe some, I think for FTX, the accountants that they used, I think they were actually primarily focused on the metaverse. Perhaps more reality was needed. So I think that matters too, right? So it's a combo.
Yeah, that's, I read, for the US firm had a top 20 audit firm, but the offshore firm had an audit firm that claimed to be the first CPA in the metaverse, whatever the heck that means. Sorry, back to the panel.
Yeah, no, I absolutely agree. I think the transparency is key now. Well, as you may have seen in the news, Binance, as a direct response to it, we publish our treasury, our cold storage wallets available to the public. And we're working closely with the Ethereum Foundation and the founder of Ethereum, Vitalik, on Merkle tree proof of reserve, so on-chain analysis of the reserves of Binance. We've also working with other industry players in order to incentivize them to disclose their treasuries as well as we do. And additionally to that, I think in order to protect our customers, we always had a fund called SAFU Fund, which is currently valued at around $1 billion in assets, and that's been even before FTX. So I think these are things that should be in the industry, and an industry where currently regulation is not clear as a framework. And this is where it's going to take us further steps to evolve from this as well.
Yeah, we are pioneered, let's say, in showing our assets and our abilities, of course, back in 2021. Start doing this in a real-time audit. So on a third company provider, audit provider, they are doing this in a real time. So all our clients and partners can check this on their website. So really, I'm happy that we are now on this topic, because for us as a lender, as obviously we are partners with Binance, with Coinbase and other exchanges where we obviously execute a lot of trades. We want to be sure that our money are safe and clients' money are safe. So that's why it's this transparency is super important. I'm really hoping that this will be just the beginning of this transparency, and maybe we can put also some standard about what we are showing, because only let's say a wallet of what the company is holding is not enough, I would say. We need to show also our abilities, just to be sure that these assets are enough to cover everything, not only in the metaverse, in the real world as well.
Yeah, thank you, Andrey, and the other panelists for those answers. So we've spoken about firms acting first to to show the community that they're transparent and doing the right thing from corporate governance for their clients. But undoubtedly, with what we've seen recently, there's going to be some blowback from governments across the globe. And undoubtedly, as the truth becomes public knowledge of exactly what was going on behind the scenes, whether it was corporate fraud or even illicit activities by some of the perpetrators at the top of FTX. As we move past that speculation, what we'll start to see is the dust settle. And I wonder what the panel think with what will be the consequences from policymakers and then effective regulation that will come, and what would you like to see?
Yeah, we touched this topic already. Obviously, regulation is coming. We can see different approach, by the way, from the different regulators in Europe, in US. I think that they need to find a way to, let's say, to put a standard to this. Like, for example, for FX and CFD companies, there is pretty much standard in Europe, at least. So I think that this must be the first step in terms of regulation approach. And obviously after that to start following all of us the rules. Of course, as we can see from in all regulated businesses, there are some guys who are trying to avoid the regulation, but obviously we need to be sure that at least at the big ones where we are working together as a partners need to follow the rules and to do the business following these regulations. So I think that it's coming. In the next 6 months, I believe that all these things will change drastically, and there will be not only a registration process, but there will be real registrations and licensing in Europe and in US as well.
Do you mean licensing for VASPs, virtual asset service providers, exchanges?
Yeah, exactly. I think it's logical after all what we see in the past, what we saw in the past 6 months.
Yeah, and it was mentioned, I think Lory mentioned MiCA, markets in crypto assets, the overarching European regulation for the crypto asset sector will have a licensing regime for virtual asset service providers. Sorry, you wanted to come in there?
Yeah, no, I think, well, as we continue to see the unfolding of FTX collapse, we will see a lot more scrutiny from regulators across the globe. But on the positive side, I think this will also speed up the process on how legislation is going to be framework and how we can regulate or license centralized platforms like ours. And I think this is a key moment for us to be kind of together and educate the lawmakers, not just in the UK, but across the world, and work closely with law enforcement and the lawmakers to educate them and teach them about this new technology.
Yeah, look, from a Coinbase perspective, I guess what we are trying to do is this 3E concept, which is engage, educate, and empower, right? So it's working with the regulators in that space. But as I mentioned earlier, I really do feel it's on us. And it's not just going to happen on its own, where we need to have these conversations to explain like how block explorers work and things like that. Like that's where we need to start. Like, and that is a strength to what we're all doing in the space. But we do need to do that hand holding and ramp up our efforts there. And that's what it's going to take. And as I mentioned earlier, I really hope there's coordination amongst regulators. So the folks in the FCA are speaking to the European Union, European Commission, and the folks in, I guess, the CFTC and so forth. I think that's really important as well.
Yeah, I agree with that sentiment. And we've heard from governments across the world call policymakers at intergovernmental standard-setting agencies such as the FSB, IOSCO, look to drive this forward. And what I would ask all of you is to engage with your local governments, your trade associations, to make sure that those guidelines that come out from those intergovernmental standard setters are balanced and fit for purpose, because there is a danger that many of those people advocating at that level come from just a certain subset and don't have all of the participants across the new innovative ecosystem of crypto to make sure we get this balance right. All right, so for the last sort of 5-10 minutes or so, let's open it up to the audience and invite any questions we may have to our panel. A few hands up here, I see. There's a roving mic coming. Thank you.
Is this working? Yeah, thanks. Hi, panel. Nice to meet you all. I'm co-founder of a crypto algo trading product. We actually use Binance, so we should probably chat Diego. We're trading crypto futures, so I'd just like to understand a little bit more from the panel about the crypto derivatives market particularly, because that's not covered by MiCA as far as I understand. It's actually covered by the traditional MiFID II license. So just interested to understand a bit more about how that, because obviously as markets emerge, derivatives tend to emerge, and it's already 3 times spot volume.
So the question is regarding derivatives, which are mostly fall under the current licensing regime of MiFID or FISMA, or whichever regulatory regime you're in Europe. So maybe let's start here with Binance, because Binance basically own the derivatives market at the minute.
Well, I think the derivatives market is specifically delicate for the retail consumers, right? We currently don't target retail consumers with derivatives. We only offer it to institutional or professional investors. So we act as a regulated entity in that sense. In terms of whether it falls into MiCA or FINMA, not sure, but we act as a regulated FINMA entity, even though we're not regulated by that.
It's also worth reminding the audience that the FCA, the UK's financial conduct regulator, banned the selling of retail derivatives in the UK. So none of these market participants are allowed to promote derivatives to the retail sector. But institutions is a different ballgame. Any other panelists on that question? Thank you for the question. We have another one, I believe.
This is about investment, first of all. The dream of crypto originally was a trustless financial system. Is that worth even investing or exploring it anymore? Can we declare that just dead? Obviously, from an exchange, you have to either invest in trust or trustlessness. And I think that question has really been answered right now. And then along with that, the elephant in the room is, if you're going to be regulated, we talk about regulators, quarterly statements, transparency. But what about the products that people are buying on your exchange? Can you hold them to that same standard? So yeah, it's fine that their money might be safe in the exchange, but what about the rug pull from the underlying crypto? Is there anything that needs to be done along those lines?
Sure. Look, I think you raised some good points. Where we are right now is in a delicate place where, unfortunately, we do need that level of assurance, I guess, in terms of audited financials and on-chain reserves, or a combination of both. So that's kind of, that is where we are. Secondly, in terms of, I guess, the rug pulls and things like that, from a Coinbase perspective specifically, we spend a huge amount of time to look at assets that we list, to vet them. And you can go onto our blog post or onto our site and review the methodology that we have. So we painstakingly review to make sure, to the very best of our ability, that we are not enabling or facilitating any pump and dump style scams. So that is something that is really important to us.
Yeah, unfortunately, we saw in the past 10, 15 years a really well-regulated company collapsed. So I think it's not only the regulation and the way of working. It's just the company approach and the market, the company strategy, how you are adopting the new businesses, and how you approach eventually new partners to, let's say, not to expose yourself and the company. And yes, we are now discussing the trust, showing assets, etc. It's in the traditional markets. This we rely on the regulators that everything is safe, but I don't think that this is the only way to continue working. It's just a way of organize the company and not to take any additional risk. So, yeah, in a way, these two worlds, the traditional markets and the crypto space, they are coming close together. And I think in the next year we will really face one registrations for both businesses.
Yeah, I will touch upon a little bit on the second question about the assets that customers are buying on our platform. And again, Binance, as Coinbase, has a very rigorous process on listing. And I think every exchange should adopt a very strict policy on what kind of assets they can list and what kind of assets they can push onto the markets. And with that as well, educate them about each of these assets and how they work and how these protocols work. And if they want to interact directly with a DeFi protocol, then there should be more advanced knowledge for these customers immediately available for them in order to avoid rug pulls, in order to avoid this kind of pump and dump scams that we see happening less often than in 2017 with the ICO boom, but they're still happening.
Yeah, and I'll just add my thoughts to the gentleman's question. Yeah, the first point is, you're right, the promise of the technology is that it's trustless. And I believe in that. It's fully verifiable on open source public networks, such as the Bitcoin, Ethereum chains. However, what we must remember is if you're new into the space, a newbie, for example, or an institutional investor, using a DeFi protocol might not necessarily fit, one, your risk profile or even your understanding. So centralized entities are necessary for certain cohorts, but with that then comes the fact that you need to trust central entity. And with FTX, we have seen that we put our trust in a group of individuals and they effectively took advantage of that trust to the tune of maybe $8 billion that was lost. So it's that balance between, yes, the promise of the technology does allow for full trustless networks that are verifiable, but at the same time, those that want to get involved, and those within what we advocate for is within the central trusted entities, we do need rules of the road. We do need a perimeter to protect against some of these issues. And just to finish on some of the poor activities that take place in crypto, like any other sector, there's always somebody trying to scam people and game the system. There are tools being built by our members of Crypto UK that use smart contract technology to specifically identify rug pulls and can do it in real time. So these tools are being built. Not only we have the blockchain analytics firms that can track, trace, and even in some cases seize nefarious activities, but regarding those people trying to scam and target vulnerable people with a pump and dump scheme, tools are being built now that are live and available for people to look at and use, build, and protect against some of this activity. So I think we're running close to the end of time. Do we have any more questions from our audience here? One at the back there. Final question. Thank you.
Hi there, yeah, my name's Darren. My question is to the Coinbase and Binance people. Coinbase and Binance mostly. I know Coinbase list shitcoins essentially as a list on their thing for people to look at. Binance have a Binance Smart Chain, which is decentralized, which is full of pump and dumps, which exit through Binance itself. So what are you doing on the recovery side of things for people that have lost their assets? And I know from personal experience that people have lost a lot of assets through your companies cashing out. So where are you in the centralized space, stopping these assets from exiting into fiat through your platform? Sorry.
Happy to answer first. So I guess, again, first things first is we do our best to only list assets which meet our strict criteria, number one. And then secondly, where there are instances of, I guess, or incidents as the case may be, they're looked at on a case-by-case basis to help, I guess, our customers as best we can. That's the approach we take. So unfortunately, there are incidents out there, and our job is to work with our customers one by one and painstakingly to see what we can do. In some instances, there's nothing we can do, and in others, we try and rectify, but it is case by case.
Yeah, I agree with that. And there is also the fact that we review all our listings on a probably a daily basis, and we list and delist assets very often from the platform. In terms of instances of market manipulation, for example, if there's a clear object or a clear reason that this happened on our platform, we'll certainly compensate some of our users if there's a clear market manipulation there. But again, if these things happen too often on a certain asset, then we will definitely review the listing on this particular asset and delist from our platform.
Ian, if I may, just one quick point before we close. It's a difficult conversation talking about crypto at the moment, right? I'm not going to say otherwise, but it is definitely not all doom and gloom, okay? And I do want to stress that. There is a huge amount of activity still taking place, and it's verifiable activity. So what do I mean by this, right? So there's a great report by Alchemy, some of you may be familiar with it, and it really actually shows you the heartbeat of the Web3 ecosystem, again, based on fact, okay? Based on on-chain fact. So if you look at some of the 3 key stats, one is library pulls. So Web3 library pulls are up about, I think, 3x on where we were this time last year. 2, if you were looking at the number of smart contracts created between this time last year and where we are today, that's up 160%. And if you look at the number of dApps, between 2018 was about 1,000, we're now at about 13,000. So if you're looking at Web3 development and growth based on hard fact and data, on-chain data, actually the ecosystem is strong at a global level. And we need to continue to monitor things like this to keep in perspective a lot of the other noise that is taking place. There is still a huge amount of building taking place. Even this week alone, we see what? Twitter saying they're bringing out a wallet, JP Morgan bringing out a wallet, Revolut bringing out a wallet. They are all in on Web3. So we need to take a step back and just keep things in perspective.
Well, I think that was a nice little summary from Lory. Let's focus on the positives, not the negatives. There's lots of great building taking place in the ecosystem. So thank you to the audience. And if you could show your appreciation to our wonderful panel. Thank you.
Thank you, everyone.